The current monetary system is a lie. It's not based on real productivity and real growth. It's based too much on debt. Debt is, as Ernest Hemingway said, can buy temporary prosperity, but it leads to the permanent ruin of the debasement of your currency. And then, in worst case scenarios, war. Because when countries are desperate, they do desperate things. They do desperate things through their currency, and they do desperate things in their foreign policy. Eventually, all great empires destroy themselves through debt and overextension, whether that's military, socially, domestically. They simply don't have enough incoming GDP or productivity or income to meet their debt levels by a huge margin. That leads to very desperate measures. And again, doing wars for financial means, masquerading as wars of freedom and democracy, and send their youngest and best to die for politicians. The dollar since 1971, like many of the major world currencies, has lost over 95% of its purchasing power when measured against a milligram of gold. Just look at these banks at record levels stacking physical gold. You should be able to say, why are they stacking gold? What it's saying, without having to say it out loud, is the world trusts physical gold more than fiat money in general, and more than the US dollar in particular. Rising gold interest is very insulting to sovereign countries whose currencies are no longer trusted. It's an embarrassment to them. There is an intentional disinformation and misunderstanding of gold in the population. They don't want you to understand what it means when the gold price rises, because what that means is your currency is getting weaker. And there's not a gold bull market, there's a fiat money bear market. And the central banks in the BRICS and the East are seeing that. It doesn't mean they're going to defeat America or defeat the West. They're just going to be more prepared.
Welcome to the Microscopic Podcast presented by GoldRepublic. My name is Alexej Jordanov, and in this format I invite you to look at the world through different lenses, to see what's hidden in plain sight. We'll dive deep to understand the forces that drive macroeconomics, financial markets, and the emergence of a new monetary system with some money like gold, silver, and digital assets like Bitcoin. We'll also investigate how geopolitics and power games shape the world we live in, but also what can we learn from history to understand the present and prepare for the future. I hope you will get fresh insight and enjoy this conversation. If you do, as always, please give it a like and subscribe, but also leave your actions down below in the comment section and share it to those who need to hear this. But before I start, I'd like you to know that if you open an account at GoldRepublic, you will receive 1 free gram of gold. Just click on the link in the description. Welcome to the Microscopic Podcast, Matthew.
It's great to be here, Alexei. Really, really honored to be here. Thank you.
Actually, we already talked in the pre-recording of this conversation. You're also multilingual, so I could have said bienvenue, welcome. Yeah. We share those 3 languages at least together. Yeah. And it's always refreshing to hear your views and insights about financial markets, the monetary system and as a whole. You're also an author. You wrote a couple of books, bestsellers as well, about gold and a couple of other topics. And you're also a thought leader in the financial markets and especially in wealth preservation. Would you maybe care to give also like a short introduction about yourself?
Yeah, I mean, I always joke that I was an accidental tourist in the markets. I came out of grad school as a young attorney and I was practicing for about 10 minutes. My closest friend then and now had been in investment banking, came from a very high net worth family. We decided during the very beginning of the dot-com bubble of the late 90s to start our own hedge fund. And I honestly can say I didn't know a stock from a bond. And it's an embarrassing success story in the sense it was a lottery ticket for us. We were able, through some contacts at Goldman Sachs, they were underwriting a bunch of IPOs. This was in the late 90s when IPOs were like the Bitcoin. It was a craze. It was a phase. There was fast money and obviously not Bitcoin in its profile, but in terms of instant wealth, in the sense that you were successful just because of what your ATM receipt said. But it was a pure luck play. We got in on this pre-IPO. Our hedge fund did very, very well. again, almost by accident, our due diligence was about lunch. It was basically about 4 or 5 IPOs. One did very well. And then after that experience, and before the dot-com bubble crashed by 2000, really in April, I had a real high-class problem. I'll admit it. I was a lottery ticket winner, but you had to think about going from speculating in wealth to preserving wealth. And I was the CIO for our family office, and then I later merged in with a multi-family office. So I went from the kind of the buy side, the sell side to the buy side, in the sense that I was no longer speculating but allocating. And I got an education, because when you have combined family money of, certainly not mine, not at all, billions, when you have billions that you're managing or allocating, usually your emails get answered and you get to meet with some of the greatest minds in the risk asset space. So my whole first 10, 15 years was just how to play risk assets, stocks, bonds, private equity, direct investments, real estate, energy, yes, commodities, but it was the classic wealth speculation mindset. And it wasn't until maybe 15 years into that, which was, again, a really wonderful problem to have, to get educated by portfolio managers in Chicago, London, New York, Asia, just the best and brightest, and some of the worst too. You get to see the good, the bad, and the ugly when you're on the buy side and you're allocating money. So you get an education that way. And I learned a lot about how the game is played. I wrote a book called Rigged to Fail, which is mostly about stocks and bonds and how the market works and how the Fed makes the markets very Pavlovian. But along that line, somewhere when from a late 20-something to an older, wiser, hopefully wiser man, I was more interested in wealth preservation. Not sexy to a lot of younger people. Totally understand. I think speculation and risk is part of learning and learning about investing. But I started to think about things as boring as purchasing power, currency risk, inflation in the real sense of the term, and about my grandkids and kids down the road. How do I think much longer than the next quarter, the next fiscal year, the next annualized return? And I dove into precious metals. I discovered Egon von Greyerz, who's a legend in the space. Talked to him as a client originally, and then, long story short, really got educated on gold. Joined Egon's team. He's a great colleague, a great mentor. We have a brilliant set of partners and people working there. And obviously, in that process, from pre-von Greyerz to today, gold was on my mind a lot, and wealth preservation was on my mind a lot, because the currency system was on my mind. The central bank system was on my mind. The history of money, the history of sound money, the distortion of sound money through great mentors and writers like David Stockman, who's from my hometown in Stevensville, Michigan. Just really trying to understand what happened to free price discovery, natural supply and demand, currency risk since the 70s, et cetera. So gold became almost too obvious at that point, and not as a gold bug, not as an asset class to speculate in, although it has price appreciation, certainly this year, but that was never my main focus. And it was actually a much easier mindset, because I'm not worried about portfolio X, Y, or Z, or return X, Y, or Z, or competing with managers or looking at different managers and trying to find the good from the bad. It was just, I can sleep better at night just thinking about, okay, I know the purchasing power of my currency, even the world reserve currency, is kind of a wonderful glorified ice cube, and it slowly, slowly melts over time. And that's not an exaggeration. Once you really understand the problem with debt and the problem with currency risk, which is what the Bitcoin narrative is all about too. It's a different asset, but they're certainly, I would say, using that narrative to make Bitcoin popular. This idea that you don't trust this fiat money, you don't trust these debt levels, et cetera. But for me, gold was the choice I made. Certainly doesn't return on in an annualized way like Bitcoin, but doesn't have the volatility. So for a boring older guy like me, gold just made perfect sense. And as you and I were talking before, I'm very much an American, raised in the American dream, raised in the Wall Street mentality, trained that way in grad school, certainly worked Wall Street for years. But I'm also, from my dad's side of the family, German, and my kids are all raised in France, and we live in Europe. So you have this kind of multi-perspective view of what happens when America does something at the Fed, what happens when it does something with the dollar or the interest rates, and how that affects all economies, certainly here in Europe too. And also how to be critical of your country without losing faith in your country, because you have to leave to understand it, I think, in some ways. And you certainly, from the Netherlands to Serbia to France to Germany, know what that feels like. And it's given me not an American perspective, but I think a more global perspective. And I think the global debt problems, the global currency problems are precisely that. They're global. And yet what America does in particular has a massive impact. So I've been really blessed to have that kind of American education, so to speak, in the markets, and then see its ramifications other parts of the world, and also be familiar with the Austrian School of Economics and not just the Keynesian school, because in the U.S. grad programs or economics, there's no real understanding of sound money or discussions. When I was in grad school, we didn't even talk about the Fed, and even no one could tell you who the Fed chairman was. It was all about stocks, bonds, hedge funds, tech stocks, etc. But as you dig deeper into the weeds and look under the hood of that engine more, and you really understand these forces and the forces of debt and what that does, not just to your portfolio or your return on investment or the strength of your currency, but what it means for society, what it means for geopolitics, what it means for the man on the street. All those things are coalescing now in a fascinating way. And it really is a long answer to a short question. But yeah, started off as a lucky lottery ticket on the .com NASDAQ, and went through the family office space, and then eventually now an executive out of Zurich on precious metals as a wealth preservation asset entirely.
The next question actually ties in a bit of what you just shared with us. And that is a question I always ask every new guest on the show. And that is the following. What is your most heretical opinion about the current monetary system?
Heretical meaning controversial, I would say. I'd say the current monetary system is a lie. That's what would be probably pretty heretical, because it's really not based on real productivity and real growth. It's based too much on debt. Debt is, as Ernest Hemingway said, can buy temporary prosperity, but it leads to the permanent ruin of the debasement of your currency, and then in worst case scenarios, war. Because when countries are desperate, they do desperate things. They do desperate things to their currency, and they do desperate things in their foreign policy. When von Clausewitz was writing about war as an extension of politics by another mean, that was in a pre-nuclear era. That was interesting. And I think it's a system based on lies, based on debt, based on a lack of accountability, based on an absolute failure of monetary and fiscal policies in the major economies of the world. And I think we need more honesty, more transparency, and more debate about what debt does to a country and what quantitative easing really means, what currency debasement looks like. And again, this is ohne Ausnahme, without exception throughout history. Whether you're talking about the denarius in the ancient Rome, when they were 100% silver, and within 200 years they had 0% silver in their coin because they were in long-standing wars and they were debasing to buy time, buy popularity, buy power. But, Neil Ferguson, I wrote about recently, he's a Scottish guy. He's not a member of the Republican or Democratic Party. He was looking at America very carefully, looking at the history of empires. And when your interest on your debt exceeds your defense spending, as it does in America this year and now, without exception throughout history. Again, you're looking at the Ottoman Empire, the 19th century, the British Empire, the 20th century, the Dutch Empire, or you look at Habsburg Spain. Eventually, all great empires destroy themselves through debt and overextension, whether that's military, socially, domestically. They simply don't have enough incoming GDP or productivity or income to meet their debt levels by a huge margin. That leads to very desperate measures. And again, this is without exception. I think we're going from what Hemingway described as the temporary prosperity of debt to the permanent ruin, whether that's through social unrest, inflation, which hurts the man on the street. It's an invisible tax. It's really theft. It compounds. And then, of course, you get into desperate foreign policies. And what do we see all around us today? Debates and discussions about ongoing inflation and war, whether it's a proxy war, a direct war, threats of war, the idea of war. Sadly, these things are, I think, undeniable regardless of your geopolitical views. And that worries me, of course. Now, we have a very disruptive president now. You bring up the topic of Trump, like the topic of Bitcoin, it upsets half the audience. But what, love him or hate him, he's very disruptive in a very highly levered world. So there's a lot of change coming. There's a massive pressure cooker out there. But yeah, it's another long answer to a short question. But I think the system is based on the lie that you can sustain debt permanently. A modern monetary theory to me is neither modern nor monetary nor a theory. It's been tried and tested and failed over and over throughout history. It's just, again, this is something von Mises warned about. Again, someone not discussed in the U.S. educational system. It's something David Hume wrote about in the 1750s. Thomas Jefferson argued about this with Alexander Hamilton. Hemingway understood it. Reinhardt and Rogoff today understand it, but it's not debated and it's not really discussed openly. And I think the biggest lie, one of the many lies of the 21st century, are the lies of omission in the mainstream media or the financial media that doesn't address these topics, even in politics, as it should, is a central theme. I wrote the other day, quantifiably, America and the West, and it's very true in Germany and France too, there are just 3 or 4 companies that control the entire media. And that means you control the message. And again, that sounds sensational. In the 80s, there were about 50 news outlets in America. Today, there are 5 that run the entire show. They're mostly one political side, but regardless, it's like I warned or I worry when Baron Rothschild said, give me control of the money supply. It doesn't matter who's in power. But if you control the money supply through central banks and you control the media or the information, that's two prongs of profound power. When you control the messaging and then you also control the price and supply of the currency. And I think there's a monopoly power on that at central banks, and there's monopoly powers over the messaging in Europe and in the US that have left the public thirsty, unaware maybe of what's not being discussed and how serious these things are. And I don't think the seriousness of that should be discounted because it's coming from the mouth of someone who has a bias towards gold and is selling his book. I mean, I'm an equal opportunist cynic. If I think gold is going to be a bad investment, I would say it. And no one would believe that. I just don't see it. It never has been for millennia. It won't be now. And I also can criticize American policy without being anti-American and European policies without being European. But you have to have that perspective. And I just wish more people could have an honest, open, unemotional, informed discussion on these things rather than being labeled as biased or just without any objectivity. Some facts are facts. Debt facts are stubborn things. And they have huge ripple effects on society and on people on the street and on wealth, whether you're ultra high net worth or whether you're the working poor or middle class in America. Debt affects everyone. And that's the most heretical thing I could say is we don't discuss the lies of what debt has done to the world and what it's doing to the home of the world reserve currency and what it's doing to the man on Hauptstrasse or Main Street or the Kneipe or the pub. These things are very real and they're getting more serious. Gold is becoming revalued not because the world is getting better, but because it's getting more chaotic and more fractured and splintered and frankly dangerous. It's a real pressure cooker for everyone out there right now.
If we talk about lies, and it kind of makes me think of that scene with in The Matrix, where Morpheus goes with Neo in that street, and there's like all those people like bumping against them and becoming increasingly hostile. If we see the Matrix as kind of like the monetary system, all those people have an interest in that system, and that's also maybe why the media and all those institutions do not want to address it, because they have tied interests that are depending their very own survival on that. On the functioning of this lies. If we see it maybe the other way around, was there ever a moment where there was truth in the system? And in that sense, would maybe like a period like the gold standard or pre-gold standard era of 1871 be something like that? Or how would you see that?
When you think about it, it's a really important question. Again, many Europeans understand what happened in the 40s in Europe. 85 million people killed, cities destroyed. The U.S., with its ally, the Soviet Union at the time, ended a brutal, brutal war from Rotterdam to Dresden to Hamburg. And certainly even in the countryside of France during the occupation, suffering was immense. Certainly in Asia, economies were ruined. And towards the tail end of that war, at the Bretton Woods Conference in New Hampshire, the countries got together and they decided, I don't think they really decided, there really was no choice who was going to be the major power after World War II, and that was the U.S. And the U.S. Had a currency that was gold-backed. So if you trusted the world reserve currency in 1944, you knew that if you held dollars, they were redeemable technically, or at least on paper, with real gold. So there was a trust not only in the America with the help of Russia that defeated fascism and just horrible anarchy and horrible human suffering in this incredible war, which is still palpable in Europe. That there was a trust that America could do something right, that we came out of the War of the Worlds greatest, manufacturer and creditor. We had a lot of debt, but we were a powerhouse, and we could have been a moral powerhouse as well. And in a lot of ways, we were. I think that all changed in 1971 when Nixon welched on the gold standard on Bretton Woods. So it didn't even make it, 44 to 71. It didn't even make it 3 decades. But during that period, at least the world could rely on the world reserve currency as a chaperone currency, where you could rely on this currency as a truly gold-backed currency. You could rely on this government to keep its word. But Nixon in 1971, like many politicians to come, realized that he needed to spend more. And if he had a chaperone, a gold-backed currency, he could only spend as much as he had enough gold to back it. And so he, in 1971, famously declared, for purely temporary reasons, this would be a temporary event, that they would take the dollar off the gold standard. And that had massive ramifications. He said it would only be temporary, and this was over 50 years ago, so that was just a lie. And he said it would have no impact on your dollar, would be just as strong tomorrow as it was today. Again, just a lie. And I think he knew it at the time. The dollar since 1971, like many of the major world currencies, has lost over 95% of its purchasing power when measured against a milligram of gold. That's not a gold bug case. It's just an objective fact. So your dollar did melt in its purchasing power slowly but very surely over these years. So not only was it dishonest for the American currency, it was dishonest for the world that relied on that currency, because then whatever the dollar did, it was the tail that wagged the dog of the rest of the world. If the dollar was strong or weak, if it was inflationary or deflationary, other nations who sold and certainly oil, and when they bought energy or when they created their own fiscal policies, they were basically pegged to a floating currency that had no real backing. I think that was a very distortive event in our history. So if you're talking about if there was a time in our recent memory, in our grandparents' memory, or in recent history, where there was a more honest chance at a real currency, that was between 1944 and 1971. I think since then, certainly the currency has become a currency war, as gym workers would say, but it's become it was in the 70s and 80s and 90s, our currency, your problem, this exorbitant privilege of having the U.S. dollar as world reserve currency. The rest of the world just had to swallow whatever we gave them. And I think now it's becoming our currency, our problem, because our debt levels are so high, our weaponized dollar is so distrusted, that less and less nations and central banks want the U.S. 10-year, that U.S. IOU, that famous key part of our survival. They want it less and less. This is empirical. And now we have to find someone to buy our otherwise unloved IOUs. And that creates massive problems, because if we don't create a buyer for our IOUs, bond prices fall and yields go up. If yields go up, interest rates go up. But when you're $36 trillion in debt, as opposed to $400 billion, you can't fight inflation with higher rates because you can't pay your own interest expense. And then you have no choice but to debase your currency. And then other countries who are pegged to that dollar have the same thing. So there's all kinds, and this explains the BRICS rise, and this explains the petrodollar slow churns. I mean, all things tie from that. But America lives on IOUs. Unlike the JGB in Japan and the Japanese government bonds, America expects the rest of the world to buy those bonds, those IOUs, but they're buying less. And since 2014, net, they're dumping U.S. treasuries and stacking physical gold. And the BIS has made gold a tier 1 asset alongside the 10-year for a reason. The world is moving away, not overnight, not tomorrow, not the end of the dollar, but it's moving away from the dollar. And there's going to be less demand for that dollar. So that's going to force the U.S. to make drastic moves to mouse-click fake liquidity to purchase unwanted IOUs. Because regardless of who's in the White House, there is going to be a massive delta between our tax receipts and GDP and our expenses. And we fill that gap with mouse-click money, as I call it. And that is inherently inflationary and destructive over time. It's like a slow frog boil. And I've been warning of this for years, but I've been seeing this for years, and it's only getting worse and worse. And so, again, it's not even economics anymore. It's not even just bond markets, which are so important to understand. It's history. I've seen this movie before. Le plus ça change, le plus c'est la même chose. It's just, we saw this in France in 1789 when they had these assignats, and this was this attempt to do QE1. It was going to be Necker. It was going to be temporary. And then it became QE2, QE3, QE4. And then it became Well, then it became the guillotine, and then the French Revolution, and then enter Napoleon. And this is Hemingway's warning: it goes from sublime to ridiculous. It goes from temporary prosperity, we can pay off all our debts, to social unrest, more centralized control, and then usually a despotic extreme left or right reaction, whether that's from the left or the right. And then, sadly, war. And so these are dark topics. They're not fun. I always joke at a cocktail party, they're not fun. And I'm not trying to be doom and gloom for doom and gloom's sake. And I certainly hope we can thread the needle away from some of these consequences. But again, history is just as important as math when it comes to economics. It's more important. It's more honest. And the facts of math are more honest than any political opinion, yours, mine, or anyone else's. If you get past the fog of left versus right, Tory versus Labor, Republican versus Democrat, et cetera, communist versus capitalist. If you get past all that and just look at the hard math of what debt does to a currency and what a deflated currency does to a society, it polarizes it. And then it always is, it's always followed by lies from above, control from above, masquerading as national security, your best interest, or we know what's best for you. And what's sad is most citizens of the world trusted, at least at one time, trusted governments to be the smart guys in the room, the experts in the room, and they just believed. But as a famous economist said, when you stand out in the rain long enough, you'll get in anyone's car. Now the faith is drastically changing. And I'll just stop here because I can go on and on. But the same Neil Ferguson was talking about, and again, this will sound anti-American, and again, he has no horse in this race. He's a Scotsman, not a Republican, not a Democrat. 2024 wrote a great article, Are We Turning Soviet Yet? And this is America. Is America turning Soviet? That sounded totally sensational. But he was looking at certain metrics about the Soviet Union in the 80s, just before its demise, and where the U.S. stands today. And there's a lot of different metrics, including when your defense budget is so much higher than when your interest expense is so much higher than your defense budget. Again, all empires slowly decline from that. But he was comparing the mood in Soviet Union just before the crash of the Soviet Union, and comparing with polls in the U.S. In the Soviet Union, there was just zero faith in government. There was this detachment. The government was detached from the people. It was a very old oligarchy of old names and familiar faces that were failing and detached from the people. And even sadder, during he was looking at the health statistics. There were he called them deaths of despair in the Soviet Union. Extreme alcohol consumption, suicide rates were high. There was this feeling of hopelessness. And it's hard, I think, for a lot of Americans to realize how tough it was in that period if you were on that side of Europe. But what's interesting in America, for fast forward 2024, we have more deaths from opioids, suicide, and other deaths of despair, alcohol abuse, than any other leading nation other than the Soviet Union before its collapse. So that's a non-mathematical metric way of looking at how America, these are not things like the Psalms rule or the Conference Board leading indicators or the unemployment rate at U7 or U6, or just other clear indicators that were in recession: bankruptcies, credit card delinquencies, freight indexes, interest rate levels on credit cards. These are all things that are clearly showing that the U.S. citizen is suffering. But not only are they suffering financially, they're suffering emotionally. They're suffering with this lack of hope and this kind of hopelessness. Some would say Trump is reviving that. Again, we can go on that all day long. But there is a real problem, not just in terms of mathematical measurements, but a sense of despair. And sadly, something is seemingly tragic but disconnected, like suicide rates or alcohol rates or opioid rates or antidepressants prescriptions. There's a real pressure cooker for the man on the street. And I think this is all, again, related to something as boring as debt. And that seems like totally removed. But society and where it moves is tied to debt. Central bank policies are tied to society. Powell said something a couple of years ago that nothing the Fed does is really about social inequality or unrest. We're just here to make sure employment is a certain level, inflation is at a certain level. That's just such a lie, because the Fed has created the largest wealth inequality in our history. And we have the top 10%, of which I'm a member, which owns over 90% of the wealth in the S&P. We've got a Main Street where 20% of the people polled use their entire salary to pay their rent, and they take a second job to eat. You can't ignore that. That's a sign of a real problem in the United States, the great economic power. Again, not data mining to find negative stories. We should be able to talk about this without being left or right. We should be able to talk about the working poor, the less affluent, even if you're an executive in a Swiss gold enterprise for ultra high net worth individuals, because eventually it's not good for any society when there's this much wealth inequality, this much dishonesty, this much war or drumbeats of war. And sadly, to see a comparison between the dying Soviet Union and the U.S. When I was graduating from college, Francis Fukuyama wrote a book called The End of History, The Last Man. And it was like, well, liberal democracy's won, capitalism is won, we can all go home now, everything's great. And even as a young 20-something, with a little understanding of history, that's a very arrogant thing. You know, Hock mit kommt vor der Fall. This hubris comes before the fall. This idea that America and Western liberal democracy has succeeded and capitalism is triumphant in a Hegelian sort of way, that this is the end of history. That was what, 30 plus years ago, but that's just simply not true either. In a lot of ways, we look more, and Luke Gromen said this as well, we look more like the Soviet Union. Massive debt, bloated bureaucracy, military spending that we can't afford, et cetera. Again, I don't say the U.S. is going to end like the Soviet Union in the next 5 minutes or 5 years, but we're suffering. We don't have the same respect. Our currency, our treasuries have the same respect. Our foreign policy doesn't have the same respect. Certainly in the last 4 years, our president didn't have the same respect. I think even Democrats could admit that Biden wasn't necessarily in charge. We weren't really sure who was making decisions. That should be an important question, regardless of your political party. Who is the leader of our country? Is it the cabinet? Is it the Pentagon? Is it this individual? Why did his press secretary and his cabinet and his vice president say he was sharp as a tack when everyone on the street could see that he wasn't? And that came out in the debate. Again, that shouldn't be Republican versus Democrat. That should be an American question. It should be the same thing in France, when Macron has, the power, but less than 30% of the people actually voted for him, or Olaf Scholz in Germany, or these coalition governments in Canada where Trudeau is completely unloved and yet he's in power because he's band-aided together a coalition. Is that democracy? So again, all these things, Alexei, kind of sprout out from this central problem of this rotten wing beneath our so-called growth story, which is debt. And just this year alone, the American fiscal year starts in October and November. It starts in October. In October and November, we're already over $640 billion in debt. That's worse than in 2020 during the COVID crisis. We were $400 billion in debt in that fiscal year at the end of all that spending, all that stimmy. So we are living in a crisis-like deficit level. Our budget deficit is already $640 billion. As Trump comes into office, he's inheriting this. He'll certainly spend more as well. But I'm saying these boring numbers, like budget deficits with no, concurrent Steuereinnahmen or tax receipts or GDP, these things are devastating to a society because your only way out is to inflate your way out. And so that is going to be the invisible tax of inflation, the invisible tax of a dying purchasing power of the money you measure your wealth with. And hence, all roads, as Paul Tudor Jones said, lead to inflation at this point. And if inflation is the measurement of the debasement of your currency, I look at the most sound asset to protect me from that, insurance, that debasement, that sickness. And to me, that's physical gold. It just is.
Mm. A bit like what Adam Ferguson, so another Ferguson here, described in When Money Dies, a great book, where he refers and dissects kind of like the playbook of hyperinflation in Weimar Germany, which is what a lot of experts and commentators just like you actually describe. But it's sometimes like, at least for me, and it must be for you as well, it's always a thing that in this, let's say, part of the industry, we keep on repeating, especially if you work in precious metals like gold, because as you mentioned before, gold is kind of like the anchor. That's kind of like the port that ships go to basically protect themselves from the rising tide and storm out there. How does it materialize now in terms of central bank policies? Like, what is their forward guidance now? Powell just said that he was doubting about a rate cut, even though 90% of the market expects him to further decrease the interest rates. And inflation seems to have been picking up again in the last weeks. And a lot of people also, for example, Tavi Costa, that you know as well, shared years ago already, like this beautiful graph where you can see the three phases of inflation in the 70s. How do you see that playing out?
No, it's fascinating. I mean, here we have Powell cutting rates before he hit target 2% inflation, cutting rates because the recession, again, the lie that we're not in a recession, watch what they do, not what they say. Obviously, if things were going so well and we were beating inflation and there was no real recession, why cut rates before you hit the target 2%? Well, the reason he cut rates is because we can't afford interest expense on our debt. It's just too high. And so we had no choice but to cut rates. And yet, as we're cutting rates, the yield on the 10-year is going up. That's the real interest rate. It's not the Fed funds rate. It's the yield on the 10-year. That's the key indicator for me and for most bond traders that I know. And of course the CPI measure of inflation is an open fiction. Everyone on Wall Street knows it. They're never right, but they're always correct because it's the official number. So you play that number, you use it on your portfolios and your bond assessments. I think bonds are effectively a defaulting instrument when their real returns are negative to zero. But central banks like the Fed, this is all part of this fiction. There is a point where the central banks, the hubris, the Hochmütigkeit, this arrogance of the central banks in general, but certainly the Fed, where this great force can no longer truly control supply and demand anymore. They can't distort markets. They can't control the markets like it's a thermostat in your house. Well, we'll just raise rates here, lower rates here. Employment and inflation will react immediately. We're at a point now where they're becoming more and more impotent, and they could continually postpone the hangover of the stimulus, the martini of QE1, the martini of QE2, the martini of QE3, Operation Twist, a little gin and tonic, and then more martinis to keep everyone kind of buzzed and happy, and certainly the stock markets and risk markets just ripping. But at some point, there's a hangover for that. I don't know what it is. There are signals we can look at. At some point, that lie can no longer be glossed over. And whatever the Fed or this ECB or even the BIS or the IMF or the Bank of England does, they're no longer in control of the bond market. And they're no longer in control of the currencies. And we've been talking about this for years. It seems to be getting more and more obvious to me. When rates are ripping and the Fed is cutting, when yields are ripping up and the Fed is cutting, that's a dangerous sign. I saw that in 2001. Greenspan was feverishly cutting rates, and the DXY went from 108 to 121 when Bush was coming in. This is not unusual. Same thing happened to Trump in 2016. But eventually, the hangover comes. And you can postpone it, you can delay it in the expense of your currency, but eventually things start to fall apart. When yields start to rip, it doesn't matter what the Fed says the interest rates are. The cost of money, the cost of borrowing, the interest in IOUs and debt in bonds becomes smaller, and rates get higher and higher. And the central banks lose control of interest rates. And the ideology that a central bank can control natural supply and demand forces, the physics of real capitalism, the physics of real markets, is like someone, I have a lot of friends. My father-in-law sailed around the world twice. He sailed around the world because he's a very good sailor, but he was humbled many times by the ocean, and he saw people die on the trip, and people die. In other words, to think you can control the ocean is incredibly arrogant. And so if you're going to sail around the world, you better have a weather map, and you better be very careful to stay at anchor for months at a time to avoid the Indian Ocean at certain months, or to avoid, to Cape Hope, or, certain places that are so dangerous. So you have to be humble. You have to be smart, and you have to realize you have limits to your power. You have to bow to the power of Mother Nature, bow to the power of the oceans. And what folks like Powell, Greenspan, Yellen, Bernanke, the arrogance that they can control these forces just by the flick of an interest rate or QE or QT, money tightening or money expanding. You can do that for years, like you can take drugs or drink for years, but eventually you're going to kill your liver, and eventually you're going to kill your currency. There is no exception to that. And even though we are the home of the world reserve currency, so we can keep this game going longer than, say, the National Assembly in 1789 France. They didn't last more than 10 years before it blew up. But we're the home of the world reserve currency. The world, we export our inflation to the world. But even that's weakening. The rise of the BRICS isn't just a political headline or sensationalism for gold bugs. No, it's the world moving away from the U.S. dollar slowly, and moving away from the U.S. Treasury slowly, and moving away from the petrodollar slowly, because they know if they did it all at once, that would be too dangerous for them. A lot of their currencies, like the UAE and the Saudis, are pegged to the dollar. So these things are happening slowly because the hangover The sickness in America is apparent to the rest of the world. The debt levels are apparent to the rest of the world. The weaponization of that dollar is apparent to the rest of the world. So they're moving slowly away from it. Brent Johnson's milkshake theory, this demand for the dollar, I respect. He's right. If everyone tried to delever from the dollar tomorrow, that would be a disaster. It'd be a run on the bank. But I think what the BRICS and other nations are doing is very slowly but surely. They can't run on the bank all at once. They're doing it death by 1,000 cuts. It's going to take a long time for the dollar to die. It's still going to be the world reserve currency. It's not going to change. It'll be the rupee or the ruble or the yuan. But what's happening with the BRICS, what's happening with the oil markets, what's happening with the U.S. Treasury is just an indication that the U.S. and its currency and its debt markets, although relatively better than most other countries in the world, is getting weaker and weaker. And there's a desperation now to try and fix that. And again, Trump, Biden, I've always said Mother Teresa, Albert Einstein, Santa Claus, it doesn't matter who's in now. We've gone too far. And I've used cryptic analogies like the Wehrmacht went too far in Stalingrad, and they lost. The war was over in 1943, but 2 more years of senseless death continued. Robert E. Lee lost the Civil War at Gettysburg. 2 more years of senseless death continued. Napoleon was done after Borodino in Moscow, but it took a couple more years to Waterloo. In other words, America's not going to die and disappear. It's not going to give up easily, but it's already in retreat. It's already sick. It's already too in debt. And it's already has no choice but to inflate or die or distract the people with war, blame their currency or their debt levels on COVID, on Putin, on global warming, or whatever makes the headlines tomorrow. But I've always said the real source, the real cause of our fiasco as an economy, our fiasco as a currency, our fiasco in geopolitics is our debt. And that's the bathroom mirror of politicians and central bankers. And this is what Thomas Jefferson warned and Alexander Hamilton didn't see. When you give a centralized control over your currency to a bank, independent, supposedly, from government, you lose control of your currency, you lose control of your debt, and eventually you lose control of your country. It becomes a shadow of its ideals. It's a shadow of its former self. And America is a shadow of the ideals of Thomas Jefferson and Thomas Paine and Alexander Hamilton and even James Madison. It's not the ideals that came out of the Renaissance with free price discovery, a free press, natural supply and demand. We have a 4th branch of government, which is the Fed. It's incredibly non-independent. It's really an anathema to our Constitution. And it's an anathema to Europe and the ECB to have a European Central Bank. All of these things require hours to discuss individually. But when you look under the hood of that, this goes back to my original point. I stopped worrying about stocks and bonds and speculating. I started really thinking about history longer term. Certainly there are better assets to make money on in this particular quarter or particular year than gold. But I'm thinking generations ahead now, and I'm looking at the flow of history and economics. And I see where I wrote Rig to Fail to talk about the history of central banks, what they've done. And I wrote Gold Matters to go from risk assets into precious metals and currencies because they're all tied together. It comes from stupid governance financially and fiscally at the central bank level, at the political level.
If we, let's say, focus on so you've mentioned like now the debt markets, the sovereign debt of the US that's at risk because also a lot of big bondholders, US bondholders like China and Japan are selling in record levels in the recent years. But then on top of that, what you also mentioned in other interviews is the cost of war. So we have proxy wars popping up in the Middle East with China and Taiwan, maybe potentially. We have the ongoing war in Ukraine. And then on top of that, we have what you mentioned with the BRICS movement towards a more de-dollarized world. Let's focus on first the BRICS part. Where do you see the most like the most realistic developments recently on that front, knowing that also Trump threatened, so we don't know what he's going to do when he takes office, but of 100% slap with tariffs on any idea or concept of a BRICS currency, if it would come to life. What's your take on that first?
Yeah, let's break it down. There's the tariffs and then there's the BRICS. And again, you could spend an hour on each, and I'll try and keep it simple because it is simple in a lot of ways. The themes are simple. What happens next is very complex. And truthfully, nobody really knows, especially with Trump, what he'll do and how the world will react. But just looking at the BRICS individually for a second, again, it shouldn't be a coincidence, and it's a cryptic analogy, but I've said, if you bank at Dresdner Bank or Bank of America and you write an article that's offensive to that bank and they freeze your assets, you're not going to recommend Bank of America or Dresdner Bank to your friends and family. And when you weaponize the world reserve currency, again, under the Biden administration, which was ironic because even Obama said in 2015, don't go there. Don't weaponize a neutral reserve asset like the dollar against a major power like Russia, which is already in bed. It's the R in BRICS. It's already there with China and a growing BRICS coalition. Probably not a good idea. And I saw this, Grant Williams saw this, Jim Rickards saw this. I'm hardly alone. But what happened in 2022 when we weaponized the US dollar against a major nuclear power like Russia? I'm not talking about Venezuela or Iran, which we rightfully or wrongfully have been bullying for years. That was a tipping point, as big a tipping point as, September, August 1971, when we went up the gold standard, because now trust in that neutral world reserve asset was going to die slowly and overnight, but it was going to take years to manifest. But that genie doesn't go back in the bottle when you effectively default on Russia. You defaulted on the U.S. Treasury for Russia. You seized its assets, its reserves. You took it off the Swiss system. You took it off SDR access. You're upsetting the balance. And that was a major turning point, that 2022 sanction moment. Whatever you think of the war in the Ukraine, again, that could be debated for hours. But as a foreign policy, I think it was a disastrous moment. One of the worst things in our history. It has nothing to do with whether you think Zelensky is George Washington or Putin is Hitler 2.0. It was just bad for the dollar. And it was a short-sighted policy. So when you weaponize a world reserve currency like that, again, Obama warned about it, but Robert Triffin, an economist, said that to Congress in the 1960s. John Maynard Keynes said not to do that with the world reserve assets. So that was a major turning point. It gave the BRICS the momentum politically and the fear and the dedication to slowly but surely, not overnight, that's too dangerous, to slowly but surely look for an alternative to the US dollar as a trade settlement asset, and look to an alternative to the US dollar as an energy buying asset. Because Kyle Bass saw this years ago, China's number one focus is finding a non-dollar energy solution. And so, obviously gold comes into the picture. It's not just a gold case, but what the BRICS have been doing faster than even I saw possible is, they're net settling. 45 countries are net settling now outside of the US dollar, their trades, or settling outside the dollar, period. You've got, again, China, one of the world's largest oil importers, right next door and in bed with Russia, one of the world's largest exporters who needs a buyer. And Russia's willing to take yuan for its oil because they can use that yuan to buy products in China that were once made in America but are now made in China. And then any delta in the difference, they can net settle in physical gold, and they can float that gold on the Shanghai exchange and get back the equivalent in rubles. So they're coming up with ideas that aren't sensational. They're common sense reactions to a weaponized dollar. And they're gaining momentum. And when you have countries like the UAE and Saudi Arabia joining the BRICS, that's also eyebrow raising for the long-term implications of what that means for the petrodollar. Again, just in this year, 20% more oil sold outside the dollar than the year before. Those were unthinkable things 5 years ago. And if demand for the dollar dies, not only just in general in trade, but also at the petrodollar level, that's devastating to the balance of power for the U.S. So of course Trump's concerned. He should be concerned about this. But again, these aren't anti-American, anti-dollar gloom and doom data mining. This is data analysis. This is what's happening. Again, ignored by the Wall Street Journal, ignored by the mainstream media for a reason. It's devastating longer term. So you have a weaponized dollar that is causing nations to distrust their bankers, so to speak. They don't trust anymore. I use the other analogy. If you take your girlfriend to dinner and she spends the whole time looking at the waiter, you've got a problem with your girlfriend. She may not be with the waiter, but she's looking, so that's already dangerous. And so if the UAE and Saudi Arabia are already meeting in Kazan to talk about, this Enbridge account that didn't become official because the BIS changed their minds, but the very fact that they're flirting with this notion is already dangerous to the relationship the U.S. has with the UAE and the Saudis. And the very fact that the BRICS are moving with momentum is clearly a sign that the relationship is dying. You're looking at the waiter. You're looking at a different banker, whatever. It's the relationship is changing. That's undeniable because we upset the balance by weaponizing that dollar. And not only do we upset the balance by weaponizing that dollar and causing the rest of the world to look at another girlfriend or boyfriend, we're also in debt up to our nose, up to our ears, and we don't look as sexy to the Gulf Cooperation Council or the OPEC states like we did in the 70s when we had good yields and a strong dollar. Now, it's in their own best interest to find a way outside of the dollar. Again, slowly, not overnight. That would be devastating. That'd be too much delevering. But you're seeing the hockey puck of history. You're seeing the movement of history away from the dollar. Unthinkable to the patriotic Americans who get their news just from the left or right mainstream media, unthinkable who aren't aware of what history does. Empires don't die overnight. It takes about 200, 250 years. They don't even die at all. The Netherlands are still there. England is still there. Spain is still there. They just don't have the same hegemony that they did when they were empires. And America has to accept the fact that it's not the same America it was in 1944 with the flag over Iwo Jima and the greatness that it was. It's changing. And I think citizens don't have to know all the reasons, whether they're, de-dollarization themes with the BRICS or what central bank policy means, but they feel it. They feel it in their their Alltagsleben, their day-to-day life. They're broke. They're stressed out. They're angry. They're polarized. Identity politics, left versus right polarization, racial politics, financial politics, educational politics, sexual politics. The country is so divided. And this is not unusual in any society when you're broke, when your government's broke, when you don't trust it, when you feel it in the inflation, when you can't make the standard of livings for your middle class. Again, this isn't trying to be dramatic. Just look around you, rich or poor, left or right, look around you. Get out of Palm Beach, Martha's Vineyard, Paris, Luxembourg Gardens area and go into the rest of the country. Look at how people are doing. Look at the 20% who can't pay anything more than their full salary to pay rent. Look at the credit card delinquencies at 13-year peaks. Look at car loan repossessions at 13-year peaks. So this isn't just trying to be dramatic. It's ausstehen Augen, ausstehen Sinn. Just don't look at that. Let's not talk about that until it's in your face, whether it's crime statistics, whether it's immigration problems, whether it's the death of the middle class. Again, for many, many people over age 55 in America that have over 120 trillion in assets, they don't see this. Not all, but most of them don't see it because they're okay. They could get mortgages at less than 4% when housing was affordable and jobs were plentiful. When I graduated from grad school, it was like F. Scott Fitzgerald. It was a menu. I could choose anything. Life was optimistic, hopeful. The 80s, 90s, there was unbelievable optimism. When I look at my children who are 27 and 29 with the same education, their vision of the future is very, very different than mine. So it does change. It is changing. For many, everything's fine. And certainly for the top 10%, everything's fine. And even for more than the top 10%, things are manageable. But when a large chunk of the population is desperate, and I think Anthony Scaramucci said you went from, he had a great term for it. It was aspirational. That was his parents' generation and our generation to our children's generation, which is desperational. And that isn't just, again, a tag word. It's true. I see it. As you and I talked before this. I see it in Germany. I see it in France. You see it in parts of Eastern Europe. I see it obviously in the Rust Belt states of America. You don't see it as much, again, at Mar-a-Lago or Palm Beach or Beverly Hills. You see it in Santa Monica and Venice Beach. You see it in Pioneer Square in Seattle. You see it in South Chicago. You see it in Detroit. You see it in 3rd Street Promenade in LA. It's certainly Portland, Oregon. You see it. These states and these cities are dying. And so that's not an exaggeration. Anyone who's from those places will know. And so there's a major wealth gap and there's a major crisis and there's a major crisis of confidence. And I think that explains the polarization politically too. It's not just you can debate about politics. You're either in our camp or you're against us. And it's almost visceral, the distrust. Again, all the social ramifications of a broke country that can't take care of its citizens. And all we have is what? A ripping S&P and NASDAQ and a Dow, which is completely Pavlovian based on what the Fed is going, if the Fed is being hawkish or dovish. What's our story? Our story is the stock market. And whether you love or hate NVIDIA or Bitcoin, is that going to save us? Is 10% of California's tax receipts coming from 3 tech companies? That's ridiculous. That's not sustainable. NVIDIA has 12% of our GDP and its stock price appreciation. That's not a sustainable solution to an economic crisis. You cannot look to the stock market and compare that to the economy. They're totally different things. And, I hate to say it, all bubbles burst, as, Bob Farrell said, and Charlie McKay was talking about the madness of crowds. I've never seen both in a better play right now. The madness of crowds, the desperation to speculate, and also the ever-hanging risk of mean reversion in the stock markets. And I have no idea when the stock markets will mean revert. I know what to look for, but that's not going to happen overnight. But this bubble is near a top, if not a top. And 70% of American households are in the stock market for their 401ks or their retirement. And if that market mean reverts 40, 50%, that's a whole different America. So it's a crazy, crazy pressure cooker time right now. Again, again, I see the same thing in France and Germany to a lesser degree, but it's palpable. It's human.
It is. Mm-hmm. France and Germany, you just touch upon it, and maybe I want to go back to the bubble part, but maybe let's stick to the European situation right now. Mm-hmm. France has just its debt downgraded. They had the deficit spending of, I think, 5.5% of GDP last year, and now it's projected over 6%, way above the Maastricht Treaty 4% target, if I'm not mistaken, or 3%. So that also kind of questions the whole system of the functioning of the European Union. But then its neighbor, Germany, also has a bit of like this kind of loss of industrial power sentiment, where we see a lot of big companies like Volkswagen closing for the first time in the history plants in Germany. We see also other big manufacturers relocating elsewhere. So the growth perspective in Europe is not really looking great either. What do you? How do you see this play out?
I think it's a trend. It's the natural consequence of the sins of our planners, our central planners. Again, the hangover is now coming. Again, this isn't meant to be the end of the world. It's not the end of the world, but it's going to be a more difficult next 10 years than the last 10 years. When you talk about a 6% deficit of GDP, as we have in France, way beyond the Maastricht Treaty. Again, going back to Neil Ferguson from Scotland, he said, look, throughout history, when you hit that 6% deficit of GDP, that's proof that your government's out of control. That's just proof. That's mathematical proof that you're way over your skis in debt. It's not sustainable. You can't swim with a cannonball tied to your chest and swim effectively. And that's what, again, David Hume said in 1750, when your debt to GDP gets to that level, your growth rates mathematically decrease by a third when you cross the Rubicon of certain numbers. These are just things that are omitted from the discourse right now. So France has a number of problems economically, politically, socially. When you look at Germany, a country you and I know very well, Volkswagen, the story of the headlines there isn't just a sad state of affairs for the first time in history that Volkswagen's had to close down plants. What it's saying is you have a demand problem for your product, not because your product is inferior, but there's less and less people can buy them, less and less people can afford them. It's not just a sign that German Mittelschicht or the middle class is struggling, and they are. It's also a sign that the world is struggling because a big buyer of German Volkswagens is China. And, for the last many, many decades, China's was the growth engine of the world, a debt-driven growth engine. But China's debt to GDP ratios and deficit GDP ratios are as bad, if not worse, than the U.S. And 60% of its groundwater is rotten. Its demographics are appalling. It has to import for energy and food. It has a major problem with its banking balance sheets, like the U.S. It's the cash to assets ratios. It's not just risk-weighted capital. It's a disaster. Their real estate portfolio is reminiscent of the real estate crisis in 2008. So China is no longer this great big sponge of 8%, 9% growth every year like it was for many years. So in addition to America struggling with all those endless lists of problems, China's not exactly thriving. Germany and France and Europe are not exactly thriving. And when China gets that sick with its economy, there's going to be less buying of German Volkswagens and toasters and everything else. So that affects the global economy is very tied together. And to your point about the European community, I don't see it dissolving tomorrow by any stretch. We had Brexit, of course, very controversial. During COVID, you saw how were Europeans really as concerned with Europe, or were they more concerned with their own individual countries? We saw that in Italy, and there were people losing patience with Italy, and they didn't want to help anymore. In America, if there's a hurricane in Florida, people from Ohio and Michigan have no problem sending relief to Florida. There's a sense that after our Civil War in the 1860s, they were one country with one language, one direction. Many would argue we've become diluted, but that sense of growing pains from 1776 to 2024, including the Civil War in the 1860s, brought us together as a nation, I think, in a way much stronger with a common history, common culture than the European community. As much as I respect the European community, look, you and I both know there's a massive difference between a Brit, an Italian, a German, and a Frenchman, and a Spaniard. They're very different. Are they European? Absolutely. But as economics get more and more drastic, will a German look at a Spaniard or someone in Portugal the same way they look at someone from Dusseldorf or Dresden or Hamburg differently? Where are we going to stop paying for the treasury or the bonds, of Italy if we can't even make ends meet here in Frankfurt? I don't know. I see a lot of tensions, a lot of frustration, a lot of impatience with that. I don't know if the European Union can stay together through a real crisis when a real moment comes. I hope I'm wrong. But the bureaucracy out of Brussels, the pain on Main Street, and the untested nature of this Gemeinschaft, this community, when things have gone relatively well, when it gets really, really bad, it'll very much test the European community and the ECB and the disgusting bureaucracy that is the European community. It's a bureaucracy. And the fonctionnaires, the bureaucrats who work in these places, aren't really worried about their citizens back home. They have a cush lifestyle like the BIS. It's a cush lifestyle. And they're just professional politicians and they're professional bureaucrats. And like the Soviet Union, when your bureaucracy becomes too big and the sustained level of mediocrity that creates that bureaucracy becomes too powerful and your messaging is just one kind of propaganda arm, that's not sustainable longer term. And I don't know, but the European community is about to face real recession. It doesn't have England, with Brexit, but the UK is struggling anyway. But outside of that, in Germany and France, these are the engines right now in the European community. Those engines are getting tired. They're getting slower. And with that financial or economic stress comes social unrest and social stress, and you tap onto that, rightfully or wrongfully, increasing tensions with immigration in Europe, based largely on American wars that have spread people out all over Europe. And look what's happening in Sweden, look what's happening in Germany. There's real tension. So I don't know. It's certainly getting worse, not better. The mood on the street is getting worse, not better. The anger is, left or right. They point at each other, but no one really knows what to do about it. And the rising factions of extreme left and right parties in both, again, this is history repeating itself. Immer wieder das Gleiche. It's like this is just history repeating itself. Left and right polarization, social unrest, more and more poverty, immigration debates. All of these things are in a blender right now. And then what? Now we have tariffs coming in. So it's going to be an interesting next 5-10 years for sure. Again, not very positive viewpoint, Alexej, but this is how I see it. Just do.
It's not all rainbows and glitters. So
No.
If there's things that need to be said, that's it.
Yeah.
If we look at more in detail about gold, which we're both in the industry of, and that you're also a big advocate, we've seen that central banks in a recent, let's say, 10, 15 years since 2008 have become net purchases of gold, from ranging from about like 300 tons up to 1,000 tons now recently, to levels that we haven't seen since a long time. And that signifies something that puts gold back into the center stage as a monetary metal. And in this context, I will shamelessly promote the report that we've co-sponsored with the UMFIF and the Commodity Discovery Fund for Middle and Middelkoop, where we actually talked about, they co-authored it with David March, who is the chairman of the UMFIF, and Wil Middelkoop. I wrote a small article as well on it. And the idea was that central banks are prepping for something. They're feeling something happening. Also the president of the Deutsche Bundesbank has also said it a few years ago, that he kind of like shocked kind of people with saying that gold is in no way something that you should sell, but in the opposite, acquire. And that moment on changed a bit of the stance of other central bankers. How do you explain it in a broader sense, this move from central banks all around the world?
Yeah, it's Alexej, this is the most ignored, in-your-face, screaming red, neon flashing signal that no one's talking about. Again, trite military analogy. I've beaten this in many different contexts and conversations, but I'll keep it simple. If you're on the border and you're whatever century, whatever time in history, and you know nothing about military things, but if you see an approaching set of caravans and wagons and cannonballs and horses and infantry and cannons coming to your border, you don't need to be a military expert to know something's about to change. There's something changing in the world. Something's dangerously approaching your border, so you have to react. And what we're seeing, I think since 2014 in particular, central banks, especially in the East, just dumping U.S. Treasury. Of course, China and Japan at record levels recently to buy energy and other reasons. But the net dumping of U.S. Treasuries, that tier one asset for decades at the BIS, and replacing that with physical gold. Okay, take the gold bug, take the dollar argument, take the Bitcoin, take everything aside. Just take all that aside and just look at, okay, if they've been doing this for over a decade and getting more and more increasing. And if you look at the chart of central bank gold purchases post 2022, when we weaponize the dollar, it gets even higher. And if you look at what the Gulf Cooperation Council, I see that as Zurich. We see the exports going to the oil states again. So look at what the BRICS and the East and the central banks are doing. Again, take out your gold perspective, take out your Bitcoin perspective, take out your strong or weak dollar debate, take out your left versus right debate. Just look at these banks at record levels stacking physical gold. You should be able to say, okay, that is an important issue. Why are they stacking gold? And not just, a little bit higher allocation than the year prior, but really looking at gold as a strategic reserve asset. And why is the BIS, for the first time, and did this in 2023, first time in history, making gold a tier one asset next to the U.S. 10-year, the former tier one asset? What it's saying, without having to say it out loud, is the world trusts physical gold more than fiat money in general and more than the U.S. dollar in particular. Doesn't mean they're going to disappear or get rid of the U.S. dollar, because for liquidity, the dollar is king. And fiat money is still necessary for every nation in their own local currencies. Even the BRICS promoted BRICS currency wasn't a BRICS currency, it was a BRICS trade settlement currency, and there's nuances to that, but there's differences. But the point is, look at what they're doing, not what the media or your leader du jour, your central bank near you is saying. Look at what the world's doing. They're moving their armies in a different direction because they're reacting to the weaponization of the dollar and the distrust of the dollar. And they're seeing what the BIS won't say out loud is, I'd rather save in something like gold than a paper currency with nothing behind it for the long term, for the long game, for the chess game, not the checkers game. And what would you do? You'd start storing your ammunition before the war. You'd start storing your food before the winter. You start storing your gold before things really get worse. And so I don't think it's an exaggeration to say, if you're common sense looking at the flow of physical gold into central banks and the flow out of the U.S. Treasury, that the world is seeing what the U.S. doesn't want to say out loud, or what Powell doesn't want to say out loud, is the world's changing. It's changing. And the dollar is changing. And the respect for paper money is changing, because paper money has been debased to monetize debts that are unsustainable. And everyone in Russia and China, and frankly, anyone who's paying attention in America and Germany and France, knows this. They know it, which is why we have clients in 90 countries who pay huge, our minimums are very high, millions of dollars for our vault in the Swiss Alps. Well, why are very smart people with high net worths buying gold and getting out of commercial banks? Why are central banks buying gold and getting out of U.S. treasuries? They're not saying this on Fox News. They're not talking about this on CNN. They're not talking about this on the radio station you listen to on the way to work, because it's too scary. Rising gold interest is very insulting to sovereign countries whose currencies are no longer trusted. It's an embarrassment to them. There is an intentional disinformation and misunderstanding of gold in the ganze Menge, in the population. They don't want you to understand what it means when the gold price rises, because what that means is your currency is getting weaker. And there's not a gold bull market, there's a fiat money bear market. And the central banks and the BRICS and the East are seeing that. It doesn't mean they're going to defeat America or defeat the West. They're just going to be more prepared. And in America, you probably maybe grew up with this too, the sort of the three little pigs and the big bad wolf. And there's three little pigs, and one pig builds a house out of straw, another piggy builds a house out of mud, and a third piggy builds a house out of bricks. And the two little piggies with the straw and mud houses are having so much fun. They're speculating, they're partying, they're in South Beach, they're in Monaco, whatever. You do the analogy, they're buying Ferraris, they're having a great time. The little piggy that's building the brick house is kind of boring, not very sexy, not a lot of speculation, not a lot of hype. But when the big bad wolf comes, obviously that little piggy's protected better than the two that were just speculating or partying or having a fun time because they just had to build cheap houses. I think what you're seeing in the East and the central banks is they're building a brick house. And the BRICS are literally building a brick house because they're worried about the big bad wolf longer term. They know what happens when currencies are debased, when debt becomes too unpayable, when war is everywhere on the headlines. Certainly in Europe, and you've seen that from Serbia to Germany to France, we're very familiar with the sublime going to the ridiculous overnight. It doesn't mean I'm saying that's going to happen, that we're going into war, but we're not naive about the possibility of war. We're certainly not naive about the reality of currency debasement, of distrust in the world reserve currency, of distrust in fiat money. And so the little piggies are building brick houses. The central banks are building brick houses, gold houses. They want a strategic reserve asset that holds its value better than the ice cube that is the U.S. dollar or the yuan or the ruble or the euro or the Swiss franc. So they want something that's backed by something real. And again, you could debate about Bitcoin versus gold, and you'll upset half the people when you do that. But the simple fact is, these central banks are buying gold, not Bitcoin, and the BIS has made gold, not Bitcoin, a tier one asset. And you could argue that in 20 or 30 years, Bitcoin will be a strategic reserve asset and it'll be consolidated. And I don't know. I don't think so. That's my view, but that'll upset a lot of people. But regardless of that, you have to look at the reality. For 6,000 years, gold has been money. I think for 6,000 years more, it still be. Even in a digital world, gold is still the standard. And the reason that these central banks and high net worth clients are leaving the banking system and stacking gold, and these nations are stacking gold, is they're seeing further out than the next 2 weeks, the next 2 months. And they're preparing for what no one wants to admit, that the West is broke and that the U.S. is broke. Maybe they can fix it, but as I said many times, yeah, it can be fixed, but not in 4 years, not in 2 years, and not without what Hemingway called some real disruption in the interim. And whether that's pitchforks or guillotines or debt restructuring or Bretton Woods 2.0 or a Plaza Accords 2.0, whether it's peaceful, semi-violent, really violent, I don't know. But I know that it's changing. It's seriously changing. And he or she who has the most gold will be the most protected. They won't see the annualized return of Bitcoin in 2013, but they'll stay protected as opposed to unprepared. And I think that's what this movement of gold, these record levels of gold stacking signify. It's not a coincidence anymore. It's not just a one-off. This has been years, this trend, slowly but surely since 2014 and ratcheted up since 2022 because they see the army coming on the other side of the river, on the other side of the border, and they're preparing. They're preparing. Years probably ahead. And hope I'm wrong, but I hope it's not more war. But I do see currency debasement as the end game. And so hence the gold stacking.
It's also surprising to see that, for example, Poland became now a top 10 holder of gold reserves. The Czech Republic also tenfolded gold purchases in the last years. And there's also, you mentioned in another interview, China having gold reserves that are heavily maybe underreported compared to what the World Council might have shown in terms of figures. And it kind of leads to, if you're familiar with Jan Nieuwenhuis, he had like a thesis that in Europe, at least, a lot of European countries that I've just mentioned have been refurbishing their gold reserves for preparing in officially or unofficially, formally or informally, into some sort of gold revaluation move, right, to maybe plug the balance sheet losses and be able to prepare that for the coming years. What's your view on that? Yeah, I mean, look, this is a very new but rising topic, and I can't take all credit for it. And certainly, men I really admire, like Luke Groman and Andy Sheckman, have been talking about this too, and what you've mentioned in Europe as well. It's an interesting question because I think it would make sense. I know if you assume, for example, the U.S. has the gold that it says it does. We've never really done an audit. We don't really know. But again, I think the World Gold Council could be way off on the U.S. gold. I know the World Gold Council is way off on how much gold China has. I think that's just known in the industry. And that's clearly a misinformation from the World Gold Council on Chinese gold. They have a significant amount more than reported. But if you revalued gold up 4,000 an ounce, that gives the U.S. an extra $1 trillion for every 4,000 an ounce in revaluation in liquidity. So you could multiply that by 4. So as you could get gold to a very high price, it could cover our public debt. And that would be a price level around where Bitcoin is today. If you can stomach a $100,000 Bitcoin, why can't you stomach $100,000 gold? Gold is far more dangerous to go to 100,000 overnight. That would destroy faith in currencies and fiat money. But you could see a slow ratcheting. But the thing is, let's say you revalued gold by 8,000 or 12,000 an ounce overnight.
I'm not saying that's going to happen, but I'm saying if you did, well, then he who has the most gold wins. So if you did do a global revaluation, because you have a gold exchange in New York and London, but you also have one in Shanghai, and you also have one, among the BRICS. So therefore, if you revalue gold to a level necessary to cover some of this debt, absorb some of this debt, fantastic. But then you'll see that countries like Russia and China may be more powerful than countries like the U.S. in terms of gold, depending on how much is really there. And the world isn't really sure how much gold China has. So I think you've got to be careful. If you revalue gold, if America was in a vacuum and they were the only ones who had gold, they could revalue it and they would solve their debt crisis overnight. But then if you look across the ocean, who else has gold and who has more of it? And it's not clear to me and to many in the industry that the World Gold Council's reports are even remotely accurate. And so in the meantime, before you revalue, what are these countries in the East who are playing the long game, who are playing chess, not checkers, who are thinking of an eventual revaluation? They're stacking gold now so that when it is revalued, because I think at some point it will. But to get China on board for a revaluation, I think, you're looking at gold's going to have to go much higher, and we're going to have to do a lot more concessions with China. And I think at some point it probably very, very easily could. I mean, I just think, gold will be revalued massively higher to strike a deal with China. That's what Lou Groman says. That's what I think. But I think it will be revalued at some point. I think if you're buying gold today at what you think are near all-time highs, in an inflation-adjusted way, we're not even close to all-time highs, and in relative to the broad money supply, we're not even close to all-time highs. It's as cheap today as it was in the 70s when you look at it in the right context. So buying gold today isn't buying too expensive. Eventually, I think gold will be revalued far higher. I think the central banks and the nations of the East already know that. So you stack your walnuts before the winter so you have something to eat when you need it. And I think those that are stacking now, it's like a bear preparing for hibernation. Get ready, you're going to use it. And it's going to be revalued much higher. I think central banks aren't buying gold because it's overpriced. They think it's underpriced. I think they're buying it on the cheap right now so that when it does get revalued, they'll have more power than countries that have less gold. And I think, you mentioned Poland. They have more gold than England. Gordon Brown sold all their gold. I wonder how he feels about that now. When American and Western exceptionalism was so great, I wonder how Trudeau feels about how much gold they've sold. Again, thinking short term. Yeah, it's great. Get some cash. Make me look good. Spend it on some other policies. But then when the things go bad, they don't have those walnuts stored for the winter. They don't have that reserve ready. And what do they have? Paper money that no one trusts. So I think the East and Poland they're certainly no stranger to suffering and how things can have moments. And whether you like it or not, they're very realistic. The East is very realistic. Again, I'm not saying I want to live in Shanghai or St. Petersburg. I'm not trying to be anti-West or anti-American. But look at what your competitors are doing. And they're doing it for a reason. It's not because they want to make more jewelry or stare at gold bars because they're shiny. They're realistic. They see the debasement of the currency. They see the lack of trust in governments. They see the detachment of governments from the people. They see the social unrest. They see the debt levels. They see the desperation of the situation. And they're just buying more bullets for their financial guns ahead of the battle. That's all they're doing.
If you look, though, in terms of, I do see, though, because you mentioned that China and the BRICS, Russia, would have like a considerable advantage in terms of gold holdings. But if we look at the total numbers, the G7 countries hold about 50% of total gold reserves, and the BRICS only about 16% of global reserves. So BRICS is kind of just merely catching up with its gold reserves, and they're actually at the disadvantage at the moment, if anything, in terms of gold revaluation.
And I don't want to be sensational, but I think if you look at the BRICS, the percentages you're quoting, that assumes we're even remotely close on where China has in particular. I think China has probably 10 times more than the Gold Council. Again, this is based on conversations I've had in Singapore and Istanbul and London and New York. It doesn't mean I'm right. I'm not saying that to sell gold. But look at how much they mine. Look at how much they keep in. Look at how much their banks encourage citizens to buy gold. The tonnages they mine per year. The amount they've repatriated into their country off of the exchanges in the U.S. and what officially reported. It just doesn't make sense. I think they have significantly more. And by the way, it doesn't mean that, as I said earlier, China and Russia have major economic and political problems too. We don't even know what the condition of those countries will be in, notwithstanding gold, in 10 minutes or 10 years. And I'm not saying they're super powerful, and it's just the West and the G7 that's lost touch. But I do think there's significantly more gold in the BRICS than is reported officially. So I do think, and I think even if you take the official numbers, that's why they're stacking so much now, slowly but surely, and not all at once, and why they won't revalue all at once. I think they just see the direction of the puck and they're playing it. And I think that's why the Saudis aren't going to just dismember the petrodollar in 1 minute, but they're already flirting with the waiter. They're already looking towards the BRICS. They're already looking towards China. Why wouldn't you? And they're already looking for an alternative to the U.S. dollar, because the U.S. dollar is far more volatile and the U.S. Treasury is far less valuable than it was in the 70s when they struck the deal with Kissinger in the 70s. So again, it's not just data mining to come up with a negative point. It's just look at the common sense. Look at what they're doing. Look what MBS did in Saudi Arabia. And he fist pumped Biden and shook Xi's hand. It's because Saudi has a vested interest in going east, not west. Because the West isn't dying, it isn't disappearing. It's not the end of the West. They're just not as strong. And the BRICS collectively have just as much more population and more natural resources in the G7. So just look at the flow of the money, look at the flow of the gold, look at the flow of the resources, look at the flow of the population, and look at the decline, like the Ottoman Empire, like the British Empire, like the Dutch Empire, the decline of the U.S. Empire. Not the end, just the decline. As many have said, it's not the end of U.S. dollar supremacy, but it's the end of its dollar hegemony. And to Brent Johnson's point, that's not going to happen overnight. And it doesn't mean the end of the dollar. And it certainly doesn't mean that there isn't great demand for the dollar and FX exchanges in the derivative market, in the euro banking system, the euro dollar system, which is all dollar denominated. Of course, the dollar is going to be massively king for liquidity. But you can't ignore what happened post 2022. You can't ignore what's going on since this fiasco in the Ukraine. You can't ignore the red line getting wider in the South China Sea. You can't ignore whether you call it whatever you want to call is going on in the Middle East. That's a highly toxic topic to get into, but what's happening in the Middle East is dramatic. What's happening in Syria, what's happening in the West Bank, what's happening in Israel, and what could happen in the Ukraine going forward, I don't know. No one really does, but I was talking to Clem Chambers in Frankfurt a few weeks ago. You don't even have to have war for gold to rip, because in a war, gold is the only currency. It's not actual war. It's even the threat of war. And for him and for me, sadly, there's no end in sight to the threat of war right now. And I hope I'm wrong on that. What's that?
Why is that?
There's just so much.
Gold is the only currency.
Well, when you're if you're in a major global war, a real hot war, I'm not talking sanctions against Iran or problems in Venezuela, but if we had if we had a proxy war with Russia that went into a hot war, which to me is unimaginable. I don't know how that looks. I don't know how a war with China looks in a nuclear era. To me, it's madness. But just it's a matter of national security thing. If they planned out or they war game that out to the worst case scenario, you're going to be transacting things in gold. You're going to be net settling in gold. And even though I hope that no one in Russia or at the Pentagon or in China actually thinks there's a winnable nuclear option in a hot war, I think as they war game that out, it makes sense. In addition to stacking plutonium or uranium, you've got to stack gold too as a financial national security interest, is what Clem was saying. He's not saying that we're going into World War III and therefore we're stacking gold, but he says just the threat of it. I mean, to me, what we're doing, what we're flirting with in the South China Sea, that the perimeter is creating tension. I don't think it means we're going to war with China. I don't think Putin and Trump are going to go to war. I think it's crazy that the last weekends or the last months of the Biden administration is trying to escalate a war that another administration is trying to put an end to. That's complete at odds. Whether you're left or right, there's no common policy there. There are many who say the neocons, whether it's a Republican or Democrat in office, make foreign policy for America. That's scary. But you don't have to have an actual war, but there's such a threat of war all the time. And again, that goes to Hemingway's point. At the end of a broken system, it's debasement of the currency and war. I hope it's just currency debasement. I hope it's not war. But and I hope it's not civil war, civil unrest. That's dramatic. That's sensational. But it's more and more on the lips and minds of people today than it was 5 years ago. Let's put it that way. And we all can agree on that.
I mean, to your point with war, Mark Rutte, a former prime minister of the Netherlands, is now chief NATO chairman. And he just declared a few days ago that we need to prepare for war mentally. And that, I think, is a very heavy statement when you think about it, especially coming from someone who does not have children. Right. And weights the gravity of those words by implying that we as Europeans will have to send possibly troops into the East Ukraine or where, God knows where. So yeah, I hope that that's not the case. But you have also a military background, or did I not understand it properly, or your family?
Family does, yeah.
I mean, military.
Yeah, a lot of me personally. I colorblind. I was wanting to go to the Naval Academy. I'm a geek in that, but no, I can't take any credit for being personally courageous. What I've learned from my family members from World War II to Vietnam, and from friends at West Point or the academies, or even guys that I know who've done combat tours. A lot of Americans have been doing combat tours. I can't take any credit for that, but I've known too many of them, and I've heard too many stories. The first thing I'll say, and this is just as a European American, and you and I would know this, any village in the Netherlands, or certainly in Germany or France, any village has a section of the cemetery, which is large, of people who never made it past 20. And it's appalling if you go to the cemeteries near Verdun or the Meuse Valley, or anywhere in Europe, in any village. So first of all, there's my belief that young men die for old men's stupidity throughout history. It's very easy to send young men who've never left their village to die hundreds of miles from home for a cause they can't even really name because they believed in a certain meme. So at first, I'm just very angry. I saw that with my dad's generation in Vietnam. It's usually the middle class or the uneducated or the poor, the first to be sent off to these wars or drafted, who can't get an exemption or a school exemption or a job exemption. So the poor are always, or the middle class are always sacrificed. They're always the fodder. From the guns of August 1914 to the stupid wars of World War II, to Vietnam, Korea, and elsewhere. And a lot of times, my generation, patriots who joined after 9/11 totally understood. But a lot of these people saw the military as a career option because they were from poor backgrounds. So they're going to be patriotic, but they're also driven by survival. But they're always the ones with the least options, and they're the ones that are typically filling the cemeteries fastest and under any flag. That doesn't mean there aren't real patriotic soldiers, but a lot of the guys I knew who did tours in Iraq or Afghanistan came back and said, honestly, what were we there for? Was it really democracy and freedom? Lindsey Graham just said, Ukraine's about the breadbasket, man. It's about rare earths. It's about money. He said it out loud. I'd love to see Lindsey Graham or John Bolton carry a weapon into combat and spend a night under an artillery barrage or an IED. I'd love to see that. I'd love to see them. It's really easy to puff your chest in Congress and send other people's kids out to war, or in the Netherlands or the European Union. It's a very different thing to be put in one. And so I think be very careful about using war, like von Clausewitz said, as an extension of politics. War is an extension of madness. It's madness, especially today. So I've always said soldiers to me are far better than any man or woman I've met on Wall Street. Far better. In terms of their stories, their intellect, what they take back from the experience, what they suffer emotionally. I'm a member of the Navy SEAL Foundation because I've seen these lions led by donkeys, countless conversations. It's the same with the SAS. These are incredibly brave, courageous, dedicated patriots being sent into, I think, avoidable wars for the most part. And it's not for spreading freedom and democracy. In my cynical view, I've seen this over and over since Vietnam and studied it and talked to people in my own family and outside of it. West Point grads who've studied war, but there's been very few good wars. Let's put it that way. I think World War II was probably the last good war. We can all agree something had to be done. But the kind of wars we're doing now, I think Operation Freedom was about oil. I think Ukraine is about rare earths and land. And the intel agencies have been doing regime changes in my country all over the world, from the Congo to the Middle East to Eastern Europe to Iran to Kiev. We're little spooks everywhere in those places. And then we send boots on the ground or indirectly. But look, if someone invaded Fort Lauderdale, and there was a foreign army in Toledo, I'd be the first to sign up to defend my country. I think it's what happens is empires stretch themselves too thin, doing wars for financial means, masquerading as wars of freedom and democracy, and send their youngest and best to die for politicians. And, And I'm not a liberal, left-wing, sauerkraut-eating, crazy veggie, whatever you could say, peace-loving, crazy man. No, I'm just a realist. And I don't think it's I don't think you're being unpatriotic to question the real motives for a lot of our wars. Let's put it that way.
If anything, it's actually patriotic, you would say, because you spare the life of your fellow countrymen and women.
Yeah.
On the last note, I wanted to finish off. Well, it's a different topic, but it's still related to gold. I'm sure you know and acquainted with Michael Saylor, a Bitcoin maxi Chad, who recently said in an interview or on tweet, I don't remember, that the US, and in the context of the Bitcoin Strategic Reserve, that the US should sell all its gold and buy 5 million Bitcoin straight off the bat in the next years, so that it has the first mover advantage of detaining in his opinion, soundest form of money that we have in the financial system.
Well, look, obviously, I'm going to say that's the most maddening thing I've ever heard of. It's madness to me. Now, I could be 100% wrong, so I'm not saying I've got the inside in DC. I know that's madness, and Bitcoin is stupid, and gold is brilliant. Anyone in Bitcoin is a fool, and only smart people are in gold. It's so polarizing to talk about Bitcoin. It's so polarizing to talk about left versus right that you're going to upset people. I don't know, first of all. Who am I to say? I say in the gold industry, it doesn't help, in my opinion, although you can respect their strong views, that guys like Rickards or Peter Schiff just basically call Bitcoin idiot money. You're an idiot if you're buying Bitcoin. I don't think that helps, because obviously Bitcoin's market cap is going up for a reason. You can't ignore it. You can't castigate every Bitcoin investor as just a blind, dumb speculator. That's not helpful. You also can't call gold investors archaic pet rock collectors who don't understand the new digital world and the new digital direction. So those two kind of extremes, those debates, I don't think are helpful at all. I have very smart friends. Ronnie Sturfula, the author of the In Gold Trust Report, clearly respects gold, who also is long Bitcoin. Larry Lepard, he doesn't hate gold. He's strong Bitcoin. I don't think Larry Lepard or Ronnie Sturfula are stupid. I don't think so at all. And I don't think Bitcoin investors are making a huge mistake. So I don't want to just start by comparing the two and making fun of one or the other. I think it's far more important to have a good discussion on Bitcoin versus gold. What I will say that will upset a lot of people, and it always does, is I don't think Bitcoin is today, was yesterday, or will be tomorrow money, in terms of a store of value, a medium of exchange, or a unit of account. Its properties, Mahlers and others will say, are incredibly better than gold in a digital world after consolidation. And I could be wrong. But again, I don't see Bitcoin as money. I see it more as a speculation asset. That infuriates the Bitcoin camp. I don't know why. I still think you can make a lot of money on Bitcoin. I think, as Egon and I said, Bitcoin go to $1 million or go to zero. That's never going to be true of gold. I could be wrong. Maybe Bitcoin will be money someday. They use the case of El Salvador. El Salvador legally adopted Bitcoin as a national currency, so to speak, but only 1% of the population actually trades it. What El Salvador did was get the best advantage of the best rising asset in history and use that to pay down a lot of debts, and they made the right bet. You got to give them credit for that. I will change my mind entirely on Bitcoin if it really does become a true medium of exchange. True medium of exchange. If central banks start stacking it, if the BRICS start adopting it, if currencies are settled in Bitcoin, not blockchain but Bitcoin, if it becomes really a big part of the trade, if its actual use changes, I will change my mind on Bitcoin. I won't change. I won't deny that. Until that time, I just still see it as the speculation asset of a generation, of an era of history. I mean, at a 5,000% upturn in 1 year in 2013, its annualized returns beat every asset. Its standard deviation and maximum drawdown makes it, to me, unthinkable as a store of value. So it's a very different type of investment. Again, not trying to upset the Bitcoin camp. In terms of Michael Saylor saying that, I think he has a fundamental misunderstanding of history, of what real money is. He'll say I'm completely wrong, that I don't get it, that I don't get digital future, that I don't get blockchain, that I don't get the ledger system and the decentralized nature of it. He could be right. He's certainly done more financially than I've done. He's certainly made a lot more money than me. So if just return on investment is right, then he's right. I look at Bitcoin now as kind of ironic also because you listen to guys like Voorhees months back saying, I chose Bitcoin because I don't want to be a part of the government. I don't want to be a part of banks. I don't want to be part of that system. It's rotten, and I want to be independent. I want something purely decentralized and independent. And I think he meant it. You can't deny, though, right now in the last few months, how much more political Bitcoin has become, how more politicized it's become. You can't also deny how much more centralized it's becoming with Bitcoin ETFs. Larry Fink 3 years ago said Bitcoin was a scammer. Now he's making billions off it because he can make money off it. So the price is right. So price makes right. And right now you can't deny the momentum of Bitcoin. The idea of Saylor saying we sell our gold to invest into what is still, at least in my mind, the profile of a speculation asset. He'll say, no, 20 years from now, it's going to be a real asset. So think ahead. I think that's a sign of desperation. I think when you have guys like Paul Ryan doing op-eds in the Wall Street Journal, the New York Times about stablecoin and these things, I see, and again, this is just my view, Francis Hunt has talked about this, Luke Gromen has talked about this. I didn't come up with this, but it makes sense. I see, and I've said this before, if you inflate Bitcoin like we did oil in the 1970s, Kissinger came out to OPEC and said, look, we're going to raise oil price now dollar back by at least 400% to pay off some of our Vietnam debts. That didn't come out until 2010, 2014, when some OPEC guys wrote a book about this. It's not a conspiracy theory. They deliberately inflated oil, which is dollar backed, the petrodollar, to help pay down post-war debts. Okay, fine, clever. Kissinger's very clever. You could argue that we're inflating Bitcoin politically, making it headlines, making it part of the biggest donor class for Trump. Let's inflate Bitcoin as an entry drug to get more people into stablecoin. Stablecoins are backed by 85% by treasuries now. They are. And so it's an indirect way of getting investors sexy into Bitcoin, now into stablecoins, coins like Tether, so that you can absorb unwanted IOUs from Uncle Sam. In other words, an indirect way of inflating an asset class to benefit your debt problem. Just like El Salvador smartly got into Bitcoin and at the right moment, and they used that to pay down a lot of debt. You could artificially inflate Bitcoin or naturally inflate it, whatever you want to call it, to help pay down debt if you have a Bitcoin reserve. That works if Bitcoin only goes up and to the right. And maybe it will. Maybe it will. I think it's an incredibly dangerous thing to take away the most important asset, the one that the rest of the world wants, and try and replace it with Bitcoin. I don't even think Trump believes that. And let's remember, this Bitcoin strategic reserve, this Loomis bill, isn't about the government. I mean, Loomis wants to sell gold to buy Bitcoin. That's madness to me. To me, it's madness. But right now, they're just
Loomis wants to sell gold. Sorry, can you say it again?
Yeah, well, part of this plan is, it's not just we want to have a Bitcoin strategic reserve asset and we want to revalue gold. She wants to revalue gold, or the Loomis bill wants to revalue gold, but they also want to at some point sell gold to buy more Bitcoin. Then you're actually, as a nation, adopting Bitcoin as a strategic reserve asset. What the stockpiling that Trump was talking about in the election campaign was all that ill-gotten Bitcoin from money laundering, sex trafficking, whatever, dark state stuff. We're gonna take the confiscated Bitcoin and put that aside and use that. Fine. And if it goes up, that's great. If we get to the point where we're actually, through an act of Congress or the Department of Treasury, selling gold to stockpile what I consider, me personally, a speculation asset to go long, like it's like going long Nvidia or long Bitcoin, but Bitcoin's different, money, they say, for a long-term plan, because it's part of the new digital future. Okay, there's people that will say that's great. I think that would be the sign to me when the shoe shine boy tells you to buy a stock, you know the market's overpriced. When we start getting that desperate to buy Bitcoin to get ourselves out of a national debt crisis, because someday it will be money or someday it will be a medium of exchange. Well, I mean, what does fiat money mean? It's whatever the government tells you it is. So I suppose if the government wants to make Bitcoin money, then it's money. But until I see that actually happening, I see this as a desperate sign, not an intelligent sign. And Michael Saylor will ridicule me to no end for not understanding the future and not understanding blockchain and not understanding crypto and certainly not understanding the decentralized advantages of Bitcoin. He could be right. I don't think he is. But again, to me, it's crazy, absolute crazy. And I would say that regardless of whether I was long or short gold, but again, it'll just be me selling my book. But I just think that that's absolute madness. But my view will also change dramatically if Bitcoin really is starting to be used to settle trades and be among nations and among banks. I'll change my mind overnight. But again, I think Trump has bigger problems ahead of him. I think he needs to bring down the debt to GDP. I think he needs to bring down spending. I think there's a lot of expensive things he needs to do. I hope that he doesn't fall to the Bitcoin seduction. The Bitcoin camp will totally disagree. And they'll say that's an old gold bug fogey pet rock collector, doesn't get it. Trump needs to do this to save America, to pull in El Salvador, to get the world modern, to understand the power of this new currency, this new technology. We're going into the 21st century. We got to have our eyes open and do this right. That's what they'll argue. And they could be right. And I'm saying with all sincerity, I think that's absolute madness. And yet, that's my view on that. And I'm sure it'll upset any Bitcoin person listening, but that's just how I feel, with a clear gold bias. Yeah.
And I also wonder, like, what do you define then as money then? Like, because you say that Bitcoin doesn't fulfill like its function as money. Shortly, how would you summarize that?
Well, again, it's the three key kind of academic definitions, but the first and most important to me is a store of value. Does it hold its value over time? Which, by the way, the U.S. dollar, which is money, doesn't do. It did for 30 years when it was gold backed. So you could argue gold isn't money today. Either is Bitcoin. Neither one of them is money. They're not being used as a medium of exchange. They're not being used as a unit of account. But why gold has been in the conversation for 6,000 years and will continue to be is it's got a naturally finite supply. It has actual physical properties, and it stores its value. And the simplest example I can give, unlike the U.S. dollar, which, by the way, is money. So it's very nuanced. But, in 1920, 1920s, what was gold? It was literally $20 an ounce. And if you had the average house in 1920 in America was about $5,000. A full house with the white picket fence, the lawn, the driveway, the car, the garage, it was about $5,000. So if you had a shoebox with 250 ounces of gold at $20 an ounce, that shoebox was the equivalent of one house in America. You fast forward to today, if you had the same shoebox with the 250 ounces of gold at $2,500 an ounce, that would buy you a $600,000-$700,000 house today. But if you kept the $5,000 that you had in 1920, if you kept the $5,000 you bought the house with in 1920, that wouldn't even pay for the landscaping of the house. In other words, that shoebox of gold, of 250 ounces of gold, versus a shoebox with $5,000 in cash in 1920, what would you rather hold your value? What would store your value? That shoebox of $5,000 or that shoebox of 250 ounces? It's a simple example of how gold stores its value. It doesn't go up. Fiat money just loses its purchasing power. It's just a debasement of the currency. Now, if Bitcoin can do it better than that, more stably, without a standard deviation of 160% and maximum drawdowns of 80%, if it can do that better than gold, I'll be the first to admit it. I'll change my stripes. I don't see it happening. But I do see that's the argument for what is money to your question. It's something that holds its value. But technically, gold is not a unit of account or medium of exchange in terms of you can't go to the Costco or the, Aldi and buy something with a gold coin, technically with gold bars. But look at what the BRICS countries are doing. Look at what the central banks are doing. They are net settling in gold. They are moving towards an Enbridge-like unit of account, this unit. It's based on a ratio of physical gold to gold back the trade settlement currencies, not the national currencies, the settlement currencies is a very important distinction. Countries will never give up their ability to base their own currencies. But when they're trading, they want some kind of chaperone, because you may not even trust everybody in the BRICS, but you trust gold. You do. You didn't have to like America, but when it's gold back, you trusted America. So what the French did as soon as they went off the gold standard, they brought their ships in the New York Harbor and got their gold out. They don't trust America without the gold. But the BRICS countries, what they're doing, they're showing you that, look, we just want to have a settlement currency that has gold in the mix. And even the IMF, when it talks about, central bank digital currency coming out someday, we need to have it gold back to have any legitimacy. I don't think that's us being gold bug pet rock collectors. That's true trust. Bitcoin, to me, again, this will upset people, is more politicized, ironically. It is more politicized. And I gotta say, and this will make me look like a real dunce, but it bothers me to no end. Where does Bitcoin really come from? Who owns the majority of its unliquid shares that aren't being traded? And wouldn't it be nice if we could inflate this asset so we could get out without without burying the market, without making the market tank. We could do a good sell. And if I were the inventor of this thing, which I think comes from a dark corner of Langley or DC, and that's spooky stuff. But if I had invented Bitcoin, I would create a massive bubble so I could get out without changing the market overnight. And I would create a headline, I would create a story, I would telegraph a use, and then I would inflate that asset to no end, and then I would slowly pull my shares out. I would make a market. I would fix a market. To me, it smells funny that we really don't know where its central HQ is, who its core owners are, and really who or what created this asset. But that is completely off the charts, maybe crazy for a lot of Bitcoin supporters. I've never heard a good answer for that question. But again, it doesn't mean that Bitcoin can't go much higher. And I have no problem with that. I've talked to a lot of guys in Germany, I've said it many times, who bought Bitcoin at $500, $600, $800, $1,200. And they come in and they buy physical gold from me. We don't debate whether Bitcoin and gold are the same. They know it's not the same. And what they tell me, unter vier Augen, is it's a speculation asset. And that upsets everybody who thinks it's the new gold. And again, I could be wrong, but when we're being honest, I wish I had bought it. I wish I had. I wish I could have been a Bitcoin billionaire, but I'm not. I didn't have the guts. I didn't have the courage. So you got to give credit to where it's due for those that have speculated and stayed in the game. But mathematically, more people have lost in Bitcoin than have won. If you were an early adopter and you got on the entry ramp early and you're in it now and the governments want to balloon it to get out of debt, you could make a lot of money. I do not know. I do not know. Maybe Michael Saylor knows something I don't know. Maybe he does. Probably does. But it's not a store of value. It doesn't hold its value. Yeah, that's how I see it.
As we speak, it actually broke an all-time high of $107,000. So it's also nice.
Again, it could go much higher. And I've said it openly. I think it's going to go much higher.
Yeah, I think we'll see all-time highs every other day coming from now, and we're recording this on 16th of December. We'll publish this within a few weeks, right before Christmas, I think. Yeah. Matthew, I thank you. It's been, I think, an hour and 40 minutes.
Oh, God. You have to do it in 2 parts.
I didn't see the time fly. I might do that. Yeah. But I'm really grateful for your time, for all the precious insight that you've given us. I hope to speak to you in another podcast on more detailed topics.
Absolutely. Anytime. And I'm glad we got to meet this way. A lot of really important topics to discuss. I don't have answers on all of them. I just have really strong opinions. But do your own homework. Be informed. Everyone has to challenge all sides, left, right, gold, Bitcoin, dollar up, dollar down. It's all really important stuff to think about.
Thanks a lot. Always stay curious. And I hope to talk to you very soon.
Sounds great, Alexej. Thanks.
Thanks for watching. If you liked this episode, give it a like. And don't forget to subscribe. Leave your actions down below in the comment section. And if you want to watch more videos, feel free to check the most recent video, but also any other video that we've had published on the channel before. See you next time.